Hey, Tom here, FlipAnything USA. So today I'm going to talk to you about getting the right tenant mix in your properties, especially these commercial properties like you see behind me. This is a strip center that I own. You want to get the right mix of tenants in there in order to make everybody the most comfortable they can be. And what I'm talking about is you strategically plan what tenants have parking when, and so they don't interfere with each other, or if they do cross over, it's as little interference with each other as possible. So one problem you often run into is when you're trying to fill the occupancy, the vacancies in your building, is so they're not fighting over each other. And so a lot of times you want to get in some tenants that are what I call low parkers, other parkers, tenants that have busier times during the day and have a lot more traffic. You want to coordinate that in such a way that they don't conflict with other people in the center. And sometimes that can mean, jiu-jitsu schools that operate at night. And other places that have a rush during the day, they can live together peacefully if they're operating at different times. And that's what we're going to get into with this video. But before we do that, please pound that subscribe button, hit that like button, and in the comments, folks, please post in the comments. It helps the channel a lot. But that like and subscribe is what really helps us. So please, if you would, do that and let me know what you'd like to hear if you don't like what you're hearing. Thanks. So as you build your portfolio and you get different properties, you run into different circumstances. Sometimes you don't have as much parking, because of one tenant or another. I actually have a shopping center I'm going to be driving by shortly that I bought this when I bought it a couple years ago. It had a 70% occupancy, so it was 30% vacant. But the parking lot was like 100% full. So I had to kind of be selective in my tenants because I got a really great restaurant in there and a really good little nightclub in there. But they already take the maximum amount of parking. So the challenge on that property was, how am I going to fill it up without affecting the parking much? So one of the things I did is I found a little, I have a lot of other property too, industrial and stuff. And I took one of the people that had called for industrial property, and I told them, I said, hey, look, they were a mail order company. So they really didn't have much of a parking requirement. They were going to take like 1,700 square feet. Actually, that one was 1,200 square feet. And then I had another one, 1,750 square feet, and another one, 2,250 square feet. So the challenge was to find tenants that didn't take up much parking. So the one guy was an inkjet printer. They would refill inkjet cartridges. So he was great because they're a mail order company. And so I put him into 1,100 square feet. And all he did was put a bunch of shelves in there, and he shipped stuff out the door. He didn't have any customers. Everybody was calling. It was just him and maybe one other employee. So only 2 parking spots, which I consider next to nothing in a retail center. And so then after that, I still had 2 more big spaces. And one of them, I put in a dental lab. And this guy just made teeth, or parts of teeth. But again, he was like another one-man show, but he took 2,250 square feet. He actually ended up having to move on short notice. And I let him out of his lease. I didn't have to, but I let him out of his lease. But I rolled an antique store into his space, which also is, again, when you go into an antique store, they're rarely packed unless it's in a, like a big tourist area, which this is not. It's a good location. But so I rolled I put an antique store in there. Again, low traffic. It's a mom and pop shop, so there's only one customer maybe at a time, maybe 2 or 3 at the most. So not a lot of traffic for the amount of square footage. And then the most controversial one is I had a massage parlor. They still are there, actually. But the beauty of the massage parlor was they took 1,750 square feet. 2 people work there, and I think they take the bus there. I'm not sure how they get there, but they don't seem to have a car. And and then the clientele, 1 or 2 people coming in at a time. So again, not a heavy traffic. And I actually had one of the tenants was kind of a little bit upset, said, hey, we don't really like massage folks in here, massage parlors. And I said, well, hey, you know what? You should like them because they don't take any parking. And they just kind of went, oh, yeah, well, maybe that is okay. And it was okay. And anyways, and they are a good company and they are a good business. And they've been, they've really been good. They pay their bills on time and they don't make any trouble. And then other tenants, surprisingly, are quite busy. I have a real cool, I have to do a show over there, or I have to, do a podcast or something from over there. One of my tenants, young growing company, they just doubled their space actually. And they're a hair cutting place. And he does fades, from nothing to, I don't know the lingo, these barbershop techniques, but anyhow, he's really respected barber and really passionate about what he does. And yeah, I'll have to definitely go over there and do a little, see if we can videotape. The inside of his place is really cool too. He just really a cool atmosphere. So again, what I was getting at though is sometimes, you kind of manipulate the tenancy to help the overall property, and that's what I did. The last 30% of this building I filled with what I call, low parking requirement tenants, and it's worked really well. And then of course, like I say, my restaurants, you can't hardly find a place to park on a Tuesday when most restaurants are slow on a Tuesday. These guys are packed. They have I forget what they call it. Tequila Tuesday, Tequila Chicken Tuesday, and they just kill it that day. And most places are slow. Which I've owned a restaurant too. I mean, one that I actually owned and ran. I didn't run it, I owned it, but anyway, long story. That's a story in itself. I bought a bar and restaurant, and it was a beautiful property, and it was a great investment overall. But in order to preserve the ability to have a bar there, this is what happens when you have a bar. You have to ask the neighborhood, is it okay? So when you find an existing property that has a bar, that can be a real asset because they're already, approved for liquor to sell from there. Because this was in a little bit of a residential area. And anymore, you go to ask the neighborhood if you can do anything, the answer is always no. And so what I had to do in that property is I actually had to open the restaurant myself. I had to go get a liquor license and everything. And not that I had any passion for food, I don't. But what happened was I bought the property, I renovated it, cleaned it up, and I actually rented the parking lot out to a guy that was building a big Alzheimer and elderly care facility next door. And so what I had to do, I rented him the parking lot, I think for $6,000 a month. So he rented that for $6,000 a month while I cleaned up the property that for a whole year, and or maybe over a year. So it was easy money for me to rent the parking lot up for about what I'd get for the building. And while I got to take care of the building and do the remodeling that I needed to do. The bottom line is by the time I was getting done renovating this property, it turned out the guy that I bought the building from, the liquor store, or the bar that was there, I thought, you had 2 years to reestablish sales again. You can start selling liquor as long as you do it within 2 years. If you don't do it within 2 years, you have to go back and ask for permission, which you don't want to have to do that because the answer could be no. So I went back, and it was coming up. I thought, it's been, it's getting near 2 years. Well, it was a lot closer to 2 years than I thought, because what turned out to happen was the restaurant that closed, their liquor license had expired a couple months before I had bought it. So I thought I had from the time they closed, but in fact, they were already 2 months into, their liquor license expiring. So here I thought I had 6 months left, and I only had about two and a half months maybe. So I immediately had to go get a liquor license. This was right after the big, all the big bank crashes and mortgages failing. I think it's 2008. And so, and restaurants don't particularly have great credit to begin with. And when the banks crashed, believe me, they wouldn't touch those guys. So the bottom line is I probably couldn't have rented it out or couldn't have resold it because nobody would loan to a restaurateur to buy the building. And so I ended up having to open up a restaurant and bar just so I could reset the clock and get another 2 years. And that's what I did. But anyhow, I just want to share some of the stories that come with being an investor and some of the problems that you run into and the things you solve, the way you do it.
Well, I hope you enjoyed that. You know, I have a mentorship and I have a book, Wake Up and Smell the Real Estate. The mentorship, I've already got 2 people approaching the $1 million mark. I've already had 1 surpass it. And anyways, if you get a chance, take a look at FlipAnythingUSA.com. Go to the mentorship page, see the testimonials, and see the comments on the books as well. Thanks for watching.